It's been a while since I've talked about Amazon, and since the stock is basically flat in the last 3 months, I thought it would be a good idea to make an Amazon video, a little update on what's been happening with the company. And of course, right timing, we've got a letter from Andy Jassy on things that will change internally at Amazon. So we'll discuss that. There was also a news with regards to AWS and Intel. I touched on the whole thing in a specific Intel video that will be in the top right corner. We're going to touch on some small things in this video, but overall, this is basically Amazon right now. Market cap of $1.94 trillion, has a forward PE of 35.8 times. Of course, you will say, oh, that's quite high, that's quite expensive. In my opinion, not really, because it is coming down quite fast and it is much lower than the 5-year mean. We know Amazon, from a profitability standpoint, the profitability profile of the company is becoming better and better. And as they continue to generate billions and billions in free cash flow, I do expect that they will announce a share repurchase program sooner rather than later. More recently, actually a couple of minutes ago, Microsoft announced that they have authorized a new share buyback program of around, I think, $60 billion or so, and raised dividends by 10%. Amazon right now, no dividends, and I hope they don't pay any dividend anytime soon, but I do think that in the next 2 quarters or so, we will get a share buyback program announced or authorized. Again, when these things get announced, that does not mean that they are automatically buying shares the next day. Same with Nvidia. I've seen some people make some posts about, oh, it's not very smart, not really good capital management from Nvidia to announce such a big share buyback program at current valuations. Just because it is announced and authorized does not mean that they're going to buy the shares. They will buy when they think it makes sense. So, Amazon. Let's talk about that company. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. For those that don't know, in my main portfolio, Amazon is my second largest position, right behind Tesla. Now, if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the main points of the Andy Jassy letter. So he highlights the unique culture as a key to Amazon's success and the need for constant effort to maintain it. Very, very focused on the customer, not as much focused on the competition. For them, it's customer number one, and then the rest comes after that. He proposes reducing layers of management to increase ownership, speed, and decision-making at lower levels. This is something we've seen from Mark Zuckerberg at Meta quite a while ago. Finally, Amazon does make that move, which should make them an even more powerful and more successful company in the future. Jassy also advocates for a return to in-person work, emphasizing the benefits for collaboration, culture, and learning. More specifically, coming back to work 5 times a week. Ooh, the horror. But there will still be some employees that are allowed to work remotely, depending on their contract and agreements with Amazon. He also talks about desk arrangements. So assigned desk arrangements will be reinstated in some locations, while agile arrangements will continue in others. The changes will be implemented gradually starting on January 2nd, 2025. Then we've got this announcement. Intel and AWS expand strategic collaboration, helping advance US-based chip manufacturing. So Intel and AWS today announced a co-investment in custom chip designs under a multi-year, multi-billion-dollar framework covering product and wafers from Intel. This is a significant expansion of the two companies' long-standing strategic collaboration to help customers power virtually any workload and accelerate the performance of AI applications. As part of the expanded collaboration, Intel will produce an AI fabric chip for AWS on Intel 18A, the company's most advanced process node. Intel will also produce a custom Xeon 6 chip on Intel 3, building on the existing partnership under which Intel produces Xeon scalable processors for AWS. Now you might say, oh, but I thought AWS is using NVIDIA and its own. Yeah, it's all about choice. Choice, more on that in just a second. Now, focusing more on the Amazon business and why I remain extremely bullish on Amazon despite it being close to a $2 trillion company. One is, of course, AWS. In the last 4 years, AWS grew at close to 25% CAGR, and continues to grow quite fast despite its size. Now, if we go back to what I said at the start of this video, talking about free cash flow and cash from operations, of course, we've seen cash from operations accelerate before we saw free cash flow go from negative to positive. And now look at those numbers. This is in the last 12 months, cash from operations over $100 billion, free cash flow closer to $50 billion. And I expect it to continue because, well, the business is fundamentally becoming more and more profitable. We see the low margin segments growing much slower than the higher margins one. For example, online stores, last 12 months revenue, $237 billion. In the last 4 years, growth there, 8.27% CAGR. If we look at physical stores revenue, growth there was 5.87 all the way back to Q3 2020. If we look at third-party seller services, more profitable, higher margins, growing closer to 22% CAGR since then. Advertising services, 25.14%, and subscription services revenue growing 17%. So as you can see, the segments of, and of course there's also AWS we've just seen, but the low margin business, of course, is a large part of the revenue. As you can see, the blue bars here, it's online stores, but that's low margin. The higher margin businesses are all growing much quicker. Now, focusing solely on the online stores one, there is of course a couple of segments there. There's one, North America, and the international one. We can see here North America from an operating incomes perspective has turned positive and is doing quite well. The international side has now become profitable, but some quarters a bit less than others, still not stable. They're expected to grow quite fast in many international areas, of course, less profitable than North America. This is not a secret, but as this thing becomes more and more profitable, you can expect, of course, the company to become more profitable as well, since this is their largest segments. And of course, then there is AWS. I mean, just look at the picture here, AWS doing extremely well for them. Since Q3 2020, the compound annual growth rate was closer to 30%. So yeah, I mean, amazing business. Now focusing a little bit on the AWS side of things. So we've got Graviton, Trainium, and Inferentia. So the price performance. These custom silicon chips provide up to 30 to 40% better price performance compared to traditional processors from Intel and the GPUs from either AMD or NVIDIA. This makes them highly attractive to customers looking for cost-effective solutions. Then talking about Trainium 2 and Inferentia 2, the second versions of these chips offer very compelling relative price performance, especially when supply is scarce. As for customer demand and customer use cases, there is high demand for Amazon custom silicon due to its favorable price performance benefits relative to available alternatives. Companies like Anthropic, Databricks, and Meta are using AWS purpose-built Trainium and Inferentia AI chips to maximize performance and control costs for their machine learning workloads. As for the performance improvements, Trainium 2, this chip offers 4 times faster training performance and 3 times more memory capacity compared to the first generation, enabling advantageous price performance versus alternatives. As for Graviton 4, these chips provide up to 30% better compute performance, 50% more cores, and 75% more memory bandwidth than the current generation Graviton 3 processors. As for strategic collaborations, we've seen one with Intel, but of course Amazon is extending its collaboration with NVIDIA to make AWS the best place to run NVIDIA GPUs, enabling customers to build and run LLMs faster and at a lower cost than previous generation NVIDIA GPUs on Amazon EC2. They also have AWS Neuron software, which is, I won't say the same thing as CUDA, because CUDA is specifically built for NVIDIA stuff, but this is, I would say, specifically built for AWS, making their stuff run better, smoother, and more efficient. And so right now, looking at the stock, we are 8.5% away from reaching the all-time highs, which was back here in July of 2024. Right now, the stock is sitting at a comfortable area above the 250 and the 20-day moving average. Of course, last week, the start of the week, we were under the 50 and the 20-day one, but it was a pretty strong week, so we went well above that. RSI is pretty neutral. Of course, we have a Fed meeting coming up on Wednesday. We don't know what will happen. 25 basis point cut, 50, 75, if they got the pressure from politicians. Remains to be seen, but overall, over the long run, I think Amazon is one of those companies that you just want to have in your portfolio because it's probably one of the best companies to own in good and bad times. So yeah, that's about it. That's basically why it's still number 2 in my portfolio, why I have no problems adding when I see some weakness. Could be wrong, but I doubt I am with Amazon. Anyways, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, share your thoughts down in the comment section below, and I'll see you all in the next one. Bye bye.